I think you've got to think of the unintended consequences of taking a public that has more full faith and confidence in the banking system than maybe people in this room do. We want them to have full faith and confidence in the banking system.
Is it legal to have a bail-in, to take the money of the depositor and not give it back to them? The answer is yes.
It's 2008, we had governments bailing out the too big to fail banks. Now it's time for the depositors to step in.
So when is the Federal Reserve going to cave? When is the Fed pivot going to be? We all know that it's going to happen. We just don't know the precise time frame.
People have the assumption that when they make a deposit, that's their money, but it's not. When you make a deposit, legally, you are loaning your money to the bank. And in 1995, they enacted Regulation D, which legalized and enabled the banks to sweep your deposits into sub-accounts that are in the bank's name.
I mean, it's a little bit conflicted, right? I mean, it's important that people understand they can be bailed in, but you don't want a huge run on the institution. But they're going to be. And it could be an early warning signal to the FDIC and the primary regulators when these things happen. And there may be some other prices, this is similar to what Jay was saying, in the market that you can tell whether people understand who's going to be protected, who isn't going to be protected. It would be, I think, an interesting study to look at the evolution of market prices in a situation like March of 2020, for example, and see whether people understood what might happen.
I might go further than that, Don, because I think that you look at the evolution, I think we have to sit down and talk to long-term debt investors and make sure that they, as a stakeholder group, fully understand bank debt today is not what it was before. It is not principal protected by design. And I think that expectation, I like how you started off, Betsy, like it's all about expectation setting. And I think that is absolutely critical. If that doesn't hold, this whole thing doesn't hold.
We're dealing with a society where people are getting their information in tweets. There's just no patience, I think, for going through the elaborate and careful planning that has gone on. It should be there. It should be accessible when people need to know. But I don't think you have much hope of reaching a public that doesn't have a professional need to know.
I completely agree with that. I almost think you'd scare the public if you put this out. Like, why are they telling me this? Should I be concerned about my bank? Like, my insurance company doesn't tell me what they're doing with my assets. They just assume they're going to pay my claim. I think you've got to think of the unintended consequences of taking a public that has more full faith and confidence in the banking system than maybe people in this room do. We want them to have full faith and confidence in the banking system. They know the FDIC insurance is there. They know it works. They put their money in. They're going to get their money out. So there's a select crowd of people that are in the institutional side. And if they want to understand this, they're going to find a way to understand this. There's a bunch of law firms represented in this room. There's a bunch of people who'll charge them by the hour a lot of money to explain this all to them. And it's fine. I don't have a problem with that. And they all have huge staffs. But I would be careful about the unintended consequences of starting to blast too much of this out in the general public.
I think we have to go deeper, and it's not about the U.S. versus China. It's about what underpins a world order is always the financial system.
There's roughly 3 cents in purchasing power left out of the currencies, out of the original dollar's worth of purchasing power. So what happens when you get to zero?
We are on the brink of a dramatic change where we are about to, and I'll say this boldly, we're about to abandon the traditional system of money and accounting and introduce a new one.
It's only a matter of time, unfortunately, before the dollar gets dethroned.
This new money will be sovereign in nature. Most people think that digital money is crypto and private, but what I see are superpowers introducing digital currency. The Chinese were the first. The US is on the brink, I think, of moving in the same direction. The Europeans have committed to that as well.
The Federal Reserve issued a report on CBDCs, and it noted that a CBDC could fundamentally change the structure of the US financial system.
It means digital. It means having a almost perfect record of every single transaction that happens in the economy, which will give us far greater clarity over what's going on.
They're going to print more money. They're going to print more money like there's no tomorrow, and the financial markets They loved it. More financial asset inflation. If you're rich and you have assets, then yes, this is great news. This is awesome. If you're not rich, you have no assets, congratulations, you're gonna get more inflation and a lower standard of living.
We are at the turning point of history.
Imagine a world where you can't buy anything without permission, where every daily choice you make is monitored and logged into a database controlled by the leaders of your nation. A world where you could be forced to buy the things your government wants or blocked from purchasing the things it doesn't.
We're developing, through technology, an ability for consumers to measure their own carbon footprint. What does that mean? That's where are they traveling? How are they traveling? What are they eating? What are they consuming on the platform? So, individual carbon footprint tracker. Stay tuned, we don't have it operational yet, but this is something that we're working on.
We have to mentor the population and to show through our good examples that the future requires this change, and the change at the end ultimately will be beneficial for them.